Welcome today. The topic is this is a epic historic renters nation per Redfin. And the next question is who will benefit the most? Without further ado, let me share my screen and let's get rolling. And this article just came out August the 2nd. So fresh off the press. And the headline by Redfin is Renter nation. America's renter population is growing 3 times faster than its homeowner population amid rise in home buying costs. As a real estate investor, of course, we've been helping our turnkey mom and pop real estate investors from all over the country for the past several decades. So this is just basically validate what I've been telling everybody. So right now, it's the greatest time for mom and pop real estate investors to take their real estate portfolio acquisition to the next level. And this Redfin article and many more future articles and information pretty much validates that what I've been telling you. With the rise of the renters nation, the cost of affordability is so low, we'll have more, not only will we have more renters, us landlords, us real estate investors, you will benefit the most. You will benefit the most because you have plenty of tenants that's gonna are dying to rent your house. Not only that, if we are seeing cash flow is pretty much very challenged during the pandemic, we all know that, right? But the cash flow properties for the foreseeable future will rise because of this epic historic America's rental nation. So let's briefly go over the article. Then I'm going to share with you what some of the investment opportunities that you guys can participate out there, which you're not going to find in the mainstream media. All right. So let me highlight. I did some highlights right here. Redfin, the mortgage payments are up 90% from before the pandemic. People that in the past few years, the mortgage payment has risen so much. I hate to say this word so often, historic. This is all-time high. Okay. While people who are renter, their rents have moved up to 23% from 2 years ago. So the number of renter households in America grew almost 2% year over year in the second quarter to a record 45.2 million. That is over 3 times faster than the number of homeowner households, which grew 0.6% to a record 86 million people. The number of renter households grew at the second fastest pace since 2021, while the number of homeowner households grew at the slowest pace since 2019. As you can see the chart, the renter household growth year over year is the purple color, and the homeowner households year over year are the blue color. So you can see the steady rise of both categories of people. So the number of homeowner and renter households are both at record high because the US population is at a record high. Therefore, home buying costs have risen so much faster than the rent. We are seeing many potential tenants who are entering the rental pool. As I mentioned earlier, asking rents were 23% above pre-pandemic, which is around June 2019, while the mortgage payments have skyrocketed almost double since the onset of the COVID times. Furthermore, research has done recently indicating that nearly 2 in 5, which is 40% of renters don't think they will ever own a home, which is very disappointing. However, this sentence I find very potentially laughable. Renters may be able to find deals in Austin, Texas, and many parts of Florida where rents are falling, but Florida faces intensifying risk for natural disasters and an insurance crisis. And you have to read beyond these headlines because renters, even though the rent has fallen by a few percentage points in Austin, Texas, is still very high compared to the average rent across the U.S. because Austin, Texas, right, skyrocketing home prices. And although it has gone through a slight correction at this very moment, but many parts of Florida, once again, the skyrocketing home prices in Florida has relegated many renters to really have to think twice before they want to stay in Florida because the rental cost is even higher since the pandemic, even with all the risk and what have you. So this article, this sentence is pretty misleading. All right, furthermore, let me finish the highlighting. Now, during the pandemic, the multi-unit apartment buildings, that is, all over the US, especially in the inner metro of all the major cities, there has been a multi-family construction boom. Okay. So as you can see, a lot of apartments construction, we're talking 15 units, 100 units in all the inner core of major metros throughout the US. And as a result, they have built those apartment units. However, a multi-family building permits and starts have slowed significantly recently, which could cause asking rents to jump again in the coming years. That's right. The multi-units rental situation will be there will be a shortage. So as a result, the rent will rise all over again. It's a vicious cycle for renters. So over half of the households in LA are renters. That not just LA, right? Any high price markets in the country. Southern California, Northern California, San Francisco Bay Area, where I live for the past 30 years, we have a more higher percentage of renters than anywhere in the country. Obviously, because this is an extremely high cost area, and most renters, even if they're making $200,000 and $300,000 per year without a down payment, most likely they're going to continue to be a renter for the foreseeable future, and they're paying rent $3,000 to $4,000, believe it or not, on a typical single family home throughout the major metros of California. But the median price of California in many areas are in excess of 1 million, right? You need a income around 400, almost $500,000 of income per year in order to qualify to buy a median price of a home in the San Francisco Bay Area and in LA, in Orange County, and San Diego. So in addition, you need 20% down payment, right? And a very good FICO score, 20% down payment multiplied by at least 1 million. You need at least $250,000 of down payment to qualify for a home in the area, in addition to needing almost $500,000 of salary to qualify with a FICO score of 750 or something. So a lot of people, a lot of young millennials, even though they're making six-figure income, they are continuing to be a renter. So therefore, no surprise to me, the higher percentage of renters in California and other high-price markets such as New York City, or Boston, or Miami, or Chicago, or Seattle, right? These high-price metros where people are renting. But I'm not going to go over the rest of the country. Redfin shows a list of cities, what are the percentage of homeowners, what are the percentage of renters. On a historical basis, typically there are like 66% homeowners in the country versus 40% renter. But I think the pendulum has shifted, giving the low affordability on a historic basis in the past at least 40 years and affordable. I believe the pendulum has swung with what about the ratio would be in the next 10 years or so. Would be maybe you could make the argument that would be a 50% homeowners versus 50% of the US for renters. Right. So that's the reality and that's how it is. So again, before I'll share with you some investment opportunities for investors momentarily, at the end of the day, if you want to become an investor, if you invest in a right location, you buy for cash flow at 25% down payment, even though the cash flow at the beginning, the first year or so, may be relatively low compared to the historical cash flow strategies available out there. Bear in mind that your rent will rise and so you can achieve more cash flow. All right. So with that in mind, I'm going to share my screen again, and I'm going to spend the remaining 10 minutes very quickly to go over what are some of the opportunities that are available to you out there, regardless of where you live. If you live there, especially if you live in a high price market and you want to invest in out of state, right? You go long distance, you buy long distance, Turkey, remote, in the best markets. And I'll share with you where But before I do that, Warren Buffett said, be fearful when others are greedy and be greedy when others are fearful. Right now, a lot of people are very fearful. That gives you an opportunity to have less competition right now, so you can buy all the great deals before the mortgage rate and the people sitting on the sideline will come back and saturate the market, especially right now, according to the mortgage news daily, the mortgage rate has decreased to a 1 year low, which is as of today, I believe like 6.6% 30-year fixed rate mortgage. So if the mortgage rate continue slowly but gradually decreases, that will create a surge in demand. Right now, there's no competition. You have the opportunity to negotiate to get the best deals, lock in your rate, lock in your purchase price, and then so you don't have to compete with the masses. Yeah, when the rate comes down in the next couple of years, well, then there'll be a much more competition, then much more demand than supply. The real estate mini boom will pick up over again. So you don't have to fight tooth and nail with your competitors a year or 2 years from now. You can do it right now, get on a good deal, and then sit tight and let your portfolio work hard for you long term. So before I go, then of course I'm not going to go over this. I've been over this many times on our podcast. Suffice to say, income property is the greatest investment asset since sliced cheese and apple pie. Did I say it this way? I don't know. Anyway, there are 4 ways to make money. I'm not going to go over that. Powerful income property, rental property is extremely powerful. No other investment asset class are like this. So again, I don't want to spend more than 1 hour normally to go over my slideshow, but I'll be real quick. Your journey begins long term. Your blueprint, okay? My blueprint, our blueprint, I've helped thousands of those investors from all over the country for the past 20 years to use this investment model. And today, no different. Given all the changes and all the challenges in the real estate market over the past 2 years, our turnkey investment blueprint have not changed on a fundamental basis. And here it is. Here's the blueprint. I challenge you to buy new construction, new builds in the better locations in the country. When you buy new construction homes, most likely you will obtain the highest quality tenants. A lot of tenants are staying for 2 to 3 years at a time, or not uncommon. Okay, again, this renters nation really will make you the winner when a lot of people are losers out there in this challenging housing market. So again, new construction, very low maintenance cost. That's the obvious. Very little capital expenditure over time. If you buy not in a flood zone, if you buy away from the hurricane areas, no HOA, no condos and all that stuff. And when you buy new construction, you can get very low insurance costs. That's the important. And if you can buy in a state where there is no state income tax, Florida, Texas, and 2 other places, that's ideal. You'll buy a rental property in the landlord friendly states. Okay. Easy to evict and all that. And finally, you buy investment properties in the emerging markets, in the path of growth, away from the major metros. You buy for very low affordability, below the median price of a typical home. The median price of a home in the US is around $400,000. And you can able to buy those new construction homes at way below $400,000 and match the rent that go with it, you will achieve very good cash flow at 20 to 25% down payments, regardless of the mortgage rate. The mortgage rate right now, 6.4, 6.5%, whatever. You can always date the mortgage rate, but you marry that investment house. Okay. So you buy you go to a low affordability markets, you buy entry level homes, new builds as a risk investors. And so the numbers make sense. So with that in mind, I'm going to very, very quickly, right? And of course, you can pause when you play the video. Now, this is a Midwest property. These are not new construction, but it's okay. I'm going to start off with a non-new construction market, which is in the Midwest, even though it's in Buffalo, Niagara Falls. But as long as you buy from a very reputable turnkey provider, that have completely rehabbed the property, great turnkey. So you can buy a very low price. As you can see, I'm not going to go over the numbers. You can see very clearly, but the low cost, high cash flow, very nice rehab property. You work with a very good turnkey provider. You can buy a duplex for 67,000, a single family home for 67,000, duplex for 117. Look at that monthly net cash flow at 20% down payment, 25% down payment, even with around 7% mortgage rate. Again, always refinance your mortgage rate. But then again, who care about the mortgage rate when the prices are so low? The mortgage rate difference between 7% versus 5.5% on this low price properties. We're talking only like $50 to $100 per month in terms of cash flow. So that's no big deal. So you buy a property based on the overall returns of the investment, not just little bit of cash flow, as I mentioned earlier. So duplex, very cash flow in this particular market. That's how you diversify, right? And you can buy a fourplex in the Midwest market, such as Buffalo, Niagara Falls for 173K fourplex. This is amazing. And you net monthly cash flow almost $800. And the rest of this property I'm going to share with you are all brand new construction. Is that amazing? So as I said earlier, there's so many good characteristics associated with a new construction. I don't need to go over that. This property is in Alabama, new construction, single family home, 240K, rents for 1725. In the whole 9 yards, 25% down payment. You got a builder's rate buy down at 5.5%. Yes, builders are still giving you some great incentives on a rate buy down, and you can benefit. But this rate buy down incentive may go away because the mortgage rate is coming nationwide is coming down slowly but surely. So take advantage of this last opportunity to take advantage of the seller's builders rate buy down, so you can lock in at the 30-year mortgage rate at 5.5%, which is absolutely mind-boggling. So you can achieve very good cash flow, as you can see right here. So this is Alabama. So then, of course, we have a new market in Lawton, Oklahoma. Amazing. This is absolutely mind-boggling. So you get a new construction, single family home for 150K and rents for $1,300 monthly, even with only 20% down payment, with a 6.75% mortgage rate, you still can get $240 monthly net cash flow. So amazing benefit of this new market in Oklahoma, next to a U.S. Army Fort Sill military installation, which is good. The tenants are the best when you rent to an active duty member, which myself are used to be active duty, 20 years in the U.S. Army, entire a long time ago. So I know this market very well. It's up and coming, emerging market, amazing low entry level price, very stabilized rental market. And of course, in Lawton, Oklahoma, we also have new construction duplex for only 320K, 25% down payment. Even at this mortgage rate, what have you, you can have a monthly net cash flow of 624. Again, it's much more than cash flow. You look at the numerical metrics right here. I'm not going to go over that. You can digest different numerical formulas, and you will clearly see all these opportunities I'm sharing with you very higher than usual benchmark on this numerical benchmark, such as rent to value ratio, cap rate, cash and cash return, total ROI at the end of the first year. So great value. And of course, Florida, Central Florida, away from the hurricane and flood zone, as I said, very robust Central Florida. We have some new construction, some family home for 264K, very fast growing. In Ocala, $1,700 rent. They'll give you a rate buy down, 4.75%, 10-year fix, amortized over 30 years. Another great builder incentive. As a result, your cash flow is higher, in this case, $300 per month. And a duplex for less than $400,000, also brand new in Central Florida. So very robust rental market, very good cash flow of 526. And then finally, I think it's finally, this brand new fourplex in one of the fastest growing area in Texas, and for that matter, in the whole country, up and coming. It's a boom town. Okay. So it's in South Texas. It's brand new construction located in B class. By the way, all the new constructions are located in the B to B plus class locations. Right? They are, like I said, whenever builders are building new construction, they are moving into a good neighborhood, high quality renters, high quality everything. So this is no exception. So where else in the country you can challenge me if you want, but you're not going to find a fourplex for 545K brand new anywhere in the country, especially on this great location, great neighborhood here in South Texas. 545K down payment right here, 25% down payment, even with 6-point mortgage rate, you can still cash flow. It's around $773 because it's a great product. It's a great investment, but you can always refinance, right? You buy the asset, refinance later. Most people, they wait, and until then, they will miss out. That's all I have to say. All right. Anyway, at the end of the day, how if you buy all those properties in the next years, if you have the capital resources to buy, in the end, by buying a turnkey remote long distance rentals, all you need to spend is out of your time 1 to 2 hours per month, not per day, not per week, in managing your portfolio. Why? Why would someone buy under your own name, financing, or in the name of the IRA, whatever? Uh, why would you buy 5 or 10 or 15 rentals? All you need to spend 1 to 2 hours per month in managing your portfolio. Why? And the reason why is you're gonna you're gonna delegate your team in each of those markets to help you to become wealthy. Your property managers, everything, all your team, your inner circle, your support circle, your service circle, they will ensure over long term you will become successful. Property manager will pre-screen the tenants. They do everything. You don't need to see the tenant. You do not even see the property. You trust the local resources because this turnkey provider, the seller, the builders, they've been around for a long time. They know what you want as a local investors. They want clear. You need to focus on your time, prioritize your time to do what's important to you, and all the labor and everything else. You delegate to your team for overtime so you can enjoy your life under your own terms. All right. So that's pretty much it. This video is longer than what I wanted to take. At the end of the day, to recap, in that because all this validation, the renters nation, you as a potential landlord, turnkey, remote landlord that you are, you use this system with you have a trusted team in those locations. Renters Nation, you can get the best tenant. The rent will increase because there are more renters than ever before. So that's how it works. All right. So that's all I have to say. Yep. So the Renters Nation will benefit mostly the mom and pop landlords who you are, if you're watching. So this is the blueprint. So, and so the Renters Nation, the historic epic nation, will be around for a long time to come. It's not going to change too much. So right now is the best time to invest in real estate in a way that we do it here, hopefully, like our business model. All right, that's all I have to say. So with that said, if you see any value on this podcast, please like and subscribe to my YouTube channel. And most important of all is put your email in the body of the description below you on my website. Put your email on there so you can become a free member of our investment network. So once you sign in into our newsletter, you will receive free daily real estate investing information, free education, free investment opportunities, so you can help yourselves to achieve financial freedom. Thank you so much. This is Steve Lee, and I will see you on the next video. Have a nice day. Bye-bye.